good day, everyone. It's good to be here again in our factors to consider before setting up a business series. Today we should be concluding. We have discussed previously about sole proprietorship, so the advantages and disadvantages, and also in the last episode we mentioned partnership and advantages and disadvantages today. Like I promised the last time, today we'll be discussing the limited liability company. So what does it mean? Who can set it up? What are the advantages and disadvantages? Actually, limited liability company can be formed by one or two people. In some jurisdictions, actually the minimum number is 2. You have to have 2 or more people. And there are some instances where there are also the number of people can form is limited to 50. So between 2 and 50. But in some jurisdiction, it is a bit flexible. One person can form a limited liability company. One of the major features of limited liability company is that it provides liability protection, for the business owners. The business owner is not required to provide additional finance if there is liabilities, beyond the capacity of the company. If the company, for instance, falls up and it has a lot of liabilities, so what they will do is to appoint a receiver or a liquidator who will realize the asset, who will sell off the asset of the company and distribute that asset accordingly, to the creditors. I've discussed some of this issue in the past. The secured creditors are usually paid first, then the government debt is also paid, then the rest is prorated among the other creditors. So at the moment where the business collapses, the owners has no need to contribute any other financial obligation further. You cannot go and seize the owner's assets because the company collapses. So that's one of the major features of limited liability company, liability protection. So it's this kind of business that protects the owners from the debt, from the obligations of the business. So if the business runs well, fine. It doesn't. If it collapses, if they are owing, they are over indebted. So the creditors come, it's whatever they can get from the company they can get. So they cannot hold the owner responsible, for the shortfall, whatever credits that they are being owed. So that's one of the major significance of limited liability company. However, it is a bit cumbersome. One of the most cumbersome type of business to set up. A lot of requirements, that you have to meet, and it's tough. If you don't have the wherewithal, it will be practically impossible to set up a limited liability company. First, let's now look at the advantages. For the major advantages, as I've said earlier on, is the issue of separate legal entity. The business is completely seen as different from the owner, and that is a great advantage. The business is separate from the owner. So in law it is called artificial woman, artificial person. The business is seen as an artificial human being. So, and that is why in every business you will see they always put the name of the business. So because the business owns its own nomenclature different from the owners. And of course it is limited liability, meaning that in case of problem, in case of inability to run profitably, the owners' liability is limited to what they have contributed. Maybe their shares, their shareholding, financial injection to the business. That is what they are limited to. So you cannot come back and say, okay, your company so and so limited is owing me, because of that I will come and seize your personal property. No, the law protects them against that. So that's the essence of that limited liability. And because of the first advantage, this legal separation. Most often, limited liability have this benefit of perpetual existence, meaning that the business can, go to, to a foreseeable future. And there are some the reason why this is happening. In accounting, we call it going concern. A limited liability company can outlive the owners. A limited liability company, can be there forever, possible. I mean, there are some limited liability companies that have run for 100, 200 years, even when it looks as if it is a family business. So that is perpetual existence, one of the benefits of limited liability company. And of course, this is also happened because it has a kind of flexibility management structure. In limited liability company, it is not important, it's not compulsory that the owners must also be the managers. In fact, in most cases, it is advisable that you separate the owners from managers, from management rather. That's why you see most some limited liability company, you have a board of directors, which may comprise of both executive and non-executive director. Even sometimes for the separation of power, so to say, you have a board member, a board chairman, who is not involved with the day-to-day running of the business. The management, the CEO might be an executive director, which means it's playing dual role of operating at the board level and also is the head of the management. So this flexibility in management structure is one of the huge advantages of limited liability company. So the board can set up targets. The board can we could be in charge of the budget for the company. The board could be in charge of strategic planning. So and they are not encumbered with day-to-day running of the business, whereas the management handles the day-to-day running of the business. This flexibility allowed them to, just like I said earlier on when discussing partnership, it gives them even more further synergy more than the partnership, because those who are thinking, the thinkers are mostly at the board level. Then you have the doers at the management and the operational levels. And when you combine all this effort together, you get a lot of results more than running as an individual, as a sole proprietor, or even as a partnership. And because of this separation of this legal entity, it is easy to transfer ownership. It is easy to transfer. You can decide to withdraw you can sell your shareholding in a particular limited liability company. Even if you are the owner, you can sell your holding, you can sell it to a third party. So because a lot of things are regulated, a lot of regulatory requirements, so there are information about limited liability companies that are available, that are public. Anybody would buyer can come and assess, and it's also become very easy for valuers to value the business, because there are reports, there are good records. You usually keep good records because they are mandated to keep records. So that makes it easy to transfer, free transferability of whatever anybody is holding in the business. And of course, there is the issue of taxation. There are tax advantage because you can defer income, you can defer taxation. I don't want to go too deep into taxation because one, there are different laws guiding taxation in every jurisdiction. So we don't have actually the same law but taxation everywhere. But beyond that, usually it is easier for a limited liability company to have a better tax planning, and they have a lot of advantage, loss recovery and all that. That at the end of the day could enable them to enjoy free tax. And of course, when they make profit, unlike the partnership or sole proprietorship that you have to distribute all the profits, they may choose to reinvest the part of the profit, especially if they think that taking on the profit as dividend may amount to paying higher taxes. So they can, channel some of the dividends to, to grow in the business. And of course, they have better access to funds, apart from the contribution by individual owners. Because they have public record, they have record, that are imposed on them by the regulatory authority. It is easy to assess their performance, and because of that, they become easily bankable, than a privately run business. Even in some jurisdictions, a limited liability company may have access to a contract of higher value than ordinary sole trader or partnership. The only exception in the case of partnership is like when the kind of contract is of a professional service that cannot be rendered by just anybody. In that case, the partnership that have an advantage over that. But when it comes to in terms of general contract and all that, a limited liability company, have a higher pedigree, a higher advantage over other form of businesses. That is one of the reasons most people rush to incorporate a limited liability company, because they believe they can have better access to finance, better access to valuable contracts and all that. But then one of the major disadvantages of this is like, it's a lot of regulatory requirements, a lot of documentation, a lot of reports, a lot of returns. I mean, like annual returns, it's mandatory. You must submit your financial statement, your profit and loss account, your balance sheet, your cash flow statement, and all that requirements, as indicated by by the government of the jurisdiction where you operate your business. And of course, there are some even other jurisdictions that are bringing in corporate governance into the mix. So you have to submit a report how far you have complied. There are a lot of compliance requirements, for running a limited liability company. So that is a kind of a burden, and it could also become a kind of disadvantage, for establishing a limited liability company. And more importantly, it is very expensive, most expensive, to start up a limited liability company. With some little amount, you can start a sole proprietorship, and with maybe a little extra change, and with combination with other people, you can establish a partnership. But when you want to establish limited liability company, it's not expensive. You may have to, for instance, you have to hire a lawyer. There are a lot of forms to fill, there are a lot of documentation to make, there are a lot of even fees to pay, even to the registration authority. All these are very expensive. To meet. If you don't have the financial wherewithal, it may be practically impossible, to start a limited liability company. And this, when we talk of fees, it doesn't even stop at the registration level. You pay your filing fees. It's almost a yearly thing, a regular occurrence. You pay a lot of fees here and there, as a limited liability company. So those are the disadvantages of establishing a limited liability company. The cost structure is much. The documentation is a lot of documentation, a lot of regulatory compliance. Limited liability company is more regulated than other forms of businesses, because of the advantages, because of the limited liability, government seeks to regulate limited liability company to protect the interests of the general public, because they know if anything goes wrong, it is the general public that will suffer the consequences. The owners are only constrained to the extent of their contribution. The only thing they are losing is that what they are brought into the business, they are not going to take anything out. So other than that, they can go home and maybe perhaps see no more. So because of this, government try to almost over-regulate, the limited liability company. So Limited liability company has a wider scope of operation because they have wider leverage. They have more access to finances, either by contribution by the owners, or you can even bring in investors. That are not readily running, are not part of running the businesses. So this is a kind of a huge advantage, and of course they are also almost easily and readily bankable than ordinary businesses. Ordinary sole proprietor, because they will tell you, as a sole trader, everything about the business resides in you. Whatever anything happens to you, why do they get their money back and stuff like that? But for limited liability, because of the separation of the legal entity structure of the business, the lending institution will be more comfortable lending them, especially if they have good collateral to pledge for loan. So they have that advantage. Also, because of that advantage, they can take on more valuable, huge sum of businesses than sole proprietorship and sole trading. Yeah. In conclusion, everybody who wants to set out to set up a business should consider disadvantages and disadvantages. Every business is good, but every business has their own good side. They have their own bad side. Then you have to be realistic about your capacity. I want to think that your capacity at the time you want to start the business is a very critical factor to determine which kind of business you want to start. So, because every business, either it's sole trading, either you are a partnership or liability, you have to still register. Though the registration process and the fee associated with registration is a lot cheaper for sole trading and for partnership, but for limited liability company, it's a lot of money, a lot of documentation and all that. But they have better protection against liability, and ownership and management sometimes are separated, unlike the sole trader whereby the owner and management, they are the same. It's the owner that manages the business. So whichever one you think is stable for you, go ahead and do it. No one is completely bad. No one is absolutely good either. It depends on the other factor which I discussed, at the initial video. You can go back to that video and look at the other factors apart from registration, so that you will consider before you set up a business. It is a good thing to know all this information so that you don't jump into business. Like I said, people jump to because they believe it is, people who run business are better off. Let me go and start a business. Let me go start a job and do business. Yes, it is good to be an entrepreneur, but you have to understand that it's good to have experience in the kind of business you want to do. It is good to have passion in the kind of business you want to do. But for, like I said earlier on in the other videos, experience could trump over passion. With experience, you lay a good foundation. With passion, you build a worthy structure on that foundation. A foundation is usually stronger. It's a carrier of a structure. Thank you. Until we come your way, next time for another interesting topic in our business tips series. Subscribe if you have not subscribed. Thank you if you have subscribed, and share with friends. And also keep your comments coming. Online, offline, we will do all things possible within our capacity to respond to your questions, to your comments. And don't forget, those things you cannot do by yourself, hire a consultant, paid consultant, and you will be glad you did.